What's up, millennials? There's a new kid on the block when it comes down to EV charging companies, and this one is focused on fast charging. Today we're talking about Tritium charging. Today we're going to do a comparison between the Tritium charging company, also EVgo, and also the company BLNK charging. We're going to take a look at the valuations of these three companies, some other metrics, and also the charts. So let's do it! As we can see in the investor presentation of Tritium charging, this is going to become, if the deal is actually going to close, the only pure play DC fast charging play. Now, this already is the market leader when it comes down to the amount of DCFC, so the fast chargers in the world sold, because right now they have already sold more than 4,400 chargers over the world. So you can definitely see it is the market leader. It also has quite a lot of experience. When you look at the numbers, this company is already around for about 20 years in total, and for about 9 years they have been focusing on the DC charging experience. And with regards to the revenue, they already have quite solid revenue, especially compared to some other EV charging companies and definitely the smaller ones. This one already has $84 million in revenue, or they are going to get $84 million in revenue this year according to their own expectations. We're going to start this comparison between BLNK charging, between EVgo and Tritium charging by first looking at the market caps of these three companies. For BLNK charging, we're just going to focus on the current amount of outstanding shares for the company, which is about 42 million shares, and we're going to multiply that by the current share price of $35.52 to arrive at a market cap of about $1.5 billion right now. For CLII, which of course is the SPAC that's hopefully going to merge with EVgo, we're looking at an amount of outstanding shares after the merger is going to occur of 263 million shares, and if you multiply that by the current share price of $13.76, you're going to arrive at a market cap, a pro forma market cap of course, of $3.6 billion. And then the last one is, of course, our company of today, Tritium charging, which hopefully is going to merge with the SPAC DCRN. That is going to have about 170 million shares outstanding after the merger, multiplied by the current price per share of $9.90. That is going to give you a current market cap, a pro forma market cap again, of $1.7 billion. So then we can also calculate the price to sales ratios of these three companies. For BLNK charging, if we have a market cap of 1.5 billion and the revenue is estimated to be around $10 million, this is my estimate by the way, this is based on the Q1 filings of $2.2 million in revenue in Q1. If you annualize that, you're going to arrive, of course, at 2.2 times 4 is $8.8 million for the entire year. But along the year, they're likely going to grow a little bit more. So I'm going to guess that they are going to have more or less $10 million. Could be a little bit more. But yeah, for now, let's go for $10 million. So that is going to give you a price to sales ratio, basically taking the market cap, dividing it by the amount of revenue. Then the price to sales ratio is 149 for BLNK charging. Quite high indeed. And then if you look at CLII, which is going to merge with EVgo, hopefully, the market cap is 3.6 billion. The revenue is estimated to be $20 million according to the investor presentation. And that is going to give you a price to sales ratio of 181. And then DCRN, which hopefully is going to merge with Tritium charging, then the market cap is $1.7 billion. The estimated revenue is $84 million. And then the price to sales ratio becomes only 20. And that is definitely way cheaper compared to the other two companies, BLNK charging and EVgo. For the EV to sales ratios, the enterprise value to sales ratios, it is quite similar. The enterprise value is simply determined by taking the market cap we just have calculated before. We take off the amount of cash they have on their balance sheet, or the amount of cash that they are going to have on their balance sheet in the case of EVgo and Tritium charging. And then we're going to arrive at an enterprise value for BLNK charging of a little bit more than 1.2 billion. So that is going to give you a EV to sales ratio of 126 more or less. EVgo is going to have $575 million in cash on their balance sheet, which is going to lead to an enterprise value of a little bit more than $3 billion. And that is going to give you a EV to sales ratio of 152. And then DCRN merging with Tritium, Tritium, of course, is going to have $300 million in cash on their balance sheet. And that is going to give you a enterprise value of 1.4 billion. And that is going to bring you all the way down to a EV to sales ratio of 16.5x, which again is quite a bit lower compared to BLNK charging and EVgo. And by the way, if you're wondering if I'm going to do a full breakdown of the valuation for Tritium charging, I'm likely not going to do so. I think the entire calculation is already on page 40 of the investor presentation, which you can find below this video in the description. So on page 40, we can see this calculation over here, which is going to give you a price of between $14.36 per share and $16.50 per share. Again, for more information, check out page 40 of the investor presentation. Then let's also take a look at some other important metrics for these three companies. First of all, the amount of EV charging stations they have right now. And we're going to look at the fast charging stations and also the normal, the L2 charging stations. So BLNK charging, we can see that most of these charging stations are actually L2, so not a lot of DCFC charging stations. They only have 201 fast charging stations according to the numbers that I have been able to find. If you look at EVgo, that goes up to 1,412 charging stations, fast charging stations that is, and they have 466 level 2 chargers. And then of course Tritium charging has 4,400 fast chargers right now. So they are definitely the winner, the market leader, if you will, according to the amount of charging stations they have, the amount of fast charging stations that is. If we then look at the amount of years that these companies have been existing for, we can see that BLNK charging was founded in 2009, EVgo in 2010 and Tritium in 2001. So in total, it looks like Tritium, of course, has the most amount of experience so far. But do keep in mind that in the fast charging space, they have about 9 years of experience. Then if we take a look at the amount of years of experience from the CEO, we can see that BLNK charging, the CEO there, started in 2009. The EVgo CEO started in 2017. And in the case of Tritium, we can see that the CEO actually started last year. Then the amount of employees, which also is a pretty solid number to look at. For BLNK charging, we can see that there are about 101 employees according to the numbers that I have been able to find. EVgo has 178 people working there right now, and Tritium charging has the most amount of employees, 348 more or less. And then the growth of 2020 with regards to the amount of employees they had in 2020 versus 2019. We can see that for BLNK charging, that was 51% up, EVgo 28% up, and Tritium charging was growing faster with 89% up. And then the last number is the amount of job openings that I have been able to find on the websites of these three companies. For BLNK charging, we can see 8 job openings right now. EVgo has 21 and Tritium charging has 32. So it looks like Tritium charging still wants to invest a lot in employees. They still want to grow a lot with regards to the amount of employees they have. And then the chart for these three companies, we can see that the dark blue line here is CLII merging with EVgo. The light blue line is BLNK charging, and the orange line over here is DCRN merging with Tritium charging. Now keep in mind, of course, that DCRN, the merger over there, was just announced a few weeks ago, so we don't really have a lot of price action there just yet, so we can't really compare that all that well with the other two companies out there. But if you look at the other two companies, mainly CLII merging with EVgo and BLNK charging, we can see that these have been trading together. If one goes up, then the other one goes up too. And if one goes down, then the other one goes down too. So they basically trade at the same pace at the same time. So valuation-wise, it looks like Tritium is the easy winner of these three. And also the revenue for 2021 is quite a bit higher compared to the other two companies. They have more fast chargers, more experience, more employees, a higher growth rate, and more job openings too. Personally, if I would have to bet on one of these three companies, I would go for DCRN merging with Tritium charging. Of course, that is not financial advice. Now, I'm very much looking forward to hearing your opinion too. Which one of these three would you choose? Let me know in the comments. And with that being said, thank you very much for taking the time to watch this video, and I hope to see you in the next one. Bye bye!